All right, folks, we're going to be good to go here coming up in just a second here. Just going to make sure we're good across our live trading room. Here we go. Should be good to go, folks. Coming up for all of us inside the live trading room. Ryan, Chuck, Dan, Brian, Ray, and all of us there live. Great to see all of you back once again. My name is Josh Levitan for all of us on social media, Facebook Live, YouTube, Twitter, and LinkedIn. Great to have all of us back here collectively for our Traders Talk workshop. So right out the gate, we actually have a ton of trial members joining us here for this week, coming off of last week's webinar with Fausto. So allow me to introduce myself. I'm Fausto, Senior Instructor here at Separate Trading University. My name is Josh Levitan. I've been with Fausto since October of 2014. I also talk very fast. My apologies. But if you have any questions right out the gate, folks, just any trading related questions, please send it right over to my email address, josh@ctutrading.com. It's extremely important as a trial member, let alone a student as well. But for someone that's new to our live trading room, new to our streams, perhaps if you're on social media joining us today, it's extremely important to ask these questions for us to go over your trades and questions alike. Obviously, right now we have a nice mover here, little move up on the SOUN stock. So actually, we could talk about that to begin. Ryan, I got your email. One of our trial members here kind of asking there if I had received his email for today. I did, just so I see it a moment ago, Ryan. But with that, though, hey, SOUN's making a nice little squeeze up right now. We can go over this to begin, but I'd like to really start from the beginning. Start from pre-market trading. This is actually a trade I just missed out on right now. I was on a coaching call with one of our students, Felix, and I got stopped out for a break-even trade. It was on this, and then moved right back on up without me. Made the move I was looking for. But at this point in the morning, it's not really where I'm trying to force any trades, and I emotionally I can't really cry over spilt milk. Stocks moving up that I'm not in, that I thought could have moved up anyway. This is not the best time to be trading. We know that. So, that's why we have to talk about the beginning from pre-market, 8 o'clock Eastern time when news begins to come out for a lot of these trades. Obviously, the market opened at 9:30 and onward. It's been a profitable day so far. Pretty good morning so far with a few different movers, but we'll come back to this in just a little bit here. Let's start with the pre-market. At least there were a few different trades that we had on our watch list early this morning. I thought this could have been a really good pre-market session just with a few different cheapies that were up big. We had the KPRX trade. We had the SQL, the CANO stock. We had Lucy, which we'll talk about in a moment. LAC is another one, but I wasn't as high on that one. It had a big spread. So, that one we'll kind of dismiss. But, let's talk about one that didn't really work too well. It worked out all right. But obviously, as you could see here right now, this CANO chart clearly does not look too good right now. It dumped off after 9:30. It was one from pre-market that was moving up pretty gradually going into the infamous 8 o'clock move, right? So with it moving up the way it was, I'm sure that you could imagine why I was inclined to follow this, to trade it going into the pre-market at least. So let's unzipper this trade. We'll kind of see what happened on this stock, why I was interested in it, and ultimately where I got in. This actually netted me a few cents on this trade. So my broker TradeStation, we can't trade till 8 o'clock Eastern time. We can chart plan ahead before that. So that's all right. Most trades don't really make as good of a move until afterwards anyway. So it's just to say I missed out initially on this run up. All right. Well, from that point, we begin to see a couple of icebergs pop up on the bid. One here initially off of 170, but then over time 180, and they moved their order up to 181. So that's where I started to become very interested in this trade. My first one on this was a break even. I jumped in right off of 182, and I was looking for the bigger squeeze up right away, and it just didn't give it to me. It was actually a -1, but it got out basically break even price. And then once I saw it begin to inch back up a little bit later on, once a new iceberg popped up, I thought, okay, there could be more to this like I had initially suspected. So I jumped back in, same exact price right off of 182. I ended up getting out right off of 184. It was a quick 2-cent profit before the nasty shake. And then at that point, it started to kind of just squeeze back up a little bit, but I wasn't as incentivized to follow it. So this one, it was pretty nasty for a little bit, but it started to bounce up. It had a nice little ladder effect early on here. Even after I got out, I wasn't as interested in it after, but once again, the same pattern kind of repeated. But that's where we could at least say going into the market open, we don't ever really look to hold on to any of these trades. You look to kind of sell off, take your money and run around 9:10, 9:15 Eastern time going into the open. The way that I like to phrase it and teach it is, not only do you want to give the stock a chance to breathe and relax, give yourself a chance to breathe and relax and prep up for the market open. So it's just to say, at least, that once the market open rang, eesh, this is a nasty drop. And perhaps there's a chance you could begin to see a slingshot. But if it doesn't make that big move that you're expected to see, don't get stuck holding, right? So it's easy to say it ended up kind of just pulling back, consolidating. I was not as interested in this trade going into the open, so I avoided all of this, thankfully. But just it was one for pre-market. Wasn't the biggest mover, wasn't the best mover. That's one that I want to go over, actually. One that wasn't like one to really write home about, because not every trade is one to write home about. You could say this. You could say the same to be said here on the KPRX. Clearly now this trade is not looking good. This was one of the best lookers going into the pre-market. It was like up the most. It was trending up beautifully, and it was coming off of really good news. So the news that came out on this KPRX trade, it was something to do with phase two. So give me a brief moment here. I'll just type it in the chat board, see what I could pull up. Yeah, so KPRX shares trading higher after they received investigational new drug approval for phase two study of whatever drug. Okay, so hey, we always say it, right? We're no pharmacists here. Maybe one of us is, but just to say that phase one, phase two, phase three, and then you have FDA approval from that point. So phase two is like kind of middle of the road when it comes to the pharma news, but it's still pretty significant. Just given that headline that came out, this is an expected type of response right away, but hopefully there could be a lot more, right? The stock took a huge hit. Oh, I don't know what happened here. Pardon me. I had my 1 minute chart there, daily chart there should show. The stock took a huge hit over the last year. So with all of these different short squeezes we've been seeing and the way it was trending up going into 8 o'clock, why not look for a breakout? Why not look for support to build? So this was a better trade, at least from pre-market. It still dudded off afterwards. It actually had a nice little slingshot and got halted upward at first, but then dumped off. But I'll show you the level I was looking at on this position. It was a little bit after that Cano trade. Bring up my level 4 right now, my book map here briefly. All right, so it ended up bouncing from 5, essentially, from like above $5. It bounced from that point. And then it started to make a nice little shake around here, right? And I'm noticing that, well, hey, we ended up having a lot of quote unquote selling at a couple of different prices. All these larger red spikes here on my book map on the far right column here. So you could say 510 over time, 520, but I had 510 and I had 530 mapped out as key levels to watch on this trade. So for me and what I was looking for going into the pre-market at this point, I was looking for a nice under and over from that 530 level. So it took a little bit, but it eventually ended up making a nice little squeeze up. It was actually after 9 o'clock, so I thought I'd missed out on this pop. Pushed up pretty nicely, but I just remained focused on the level, jumped in as it broke over the level, and I ended up getting out before the open. I had just mentioned a second ago that you want to give yourself a chance to kind of breathe and relax before the market opens up. Well, over time, this ended up dumping off pretty quickly within the first 5 minutes. So, that's where you could at least say, take the money and run. You could always jump back in later on if the stock affords you that chance. So it ended up making a nice little push up above 530. It held above 530. And, that's where you could hope for a bigger, better move. But again, I held myself to that rule. Like, you don't want to hold into the open as much. You got to make sure that you at least get out. And, if it ends up popping suddenly without you, again, you're not trading the first 5 minutes anyway from 9:30 to 9:35. So, you just got to keep scanning and seeing what's out there, making sure that you're prepped up, have your level set, obviously going into the market open. All right, so the KPRX trade otherwise, after 9:30, it had dumped off. It just got really shaky. Got halted to the upside once. That's where it caught my interest again. But once it reopened up, it completely tanked. And then from that point, I took my eyes off it. So, it's really just for me to say I missed out on this afterwards, ended up shaking lower, broke below my, area line here, 530, 525-ish. So support became resistance, and then eventually that led to the lower low. From that point, though, let's get to the more of the main attraction here. The SQL. Okay, so the SQL. This one had popped up going into 8 o'clock or 7:30, nonetheless. So we had it on our pre-market watch list. It was like kind of flat though going into 8 o'clock. So that's where I could say for as much as it already pumped up, although I put it on the pre-market list, you got to watch out for that trend down off the highs. If it ends up just kind of making a false break, a back above one, a little pop and drop, it could easily continue to pull back and try and fill the proverbial gap down. So you don't want to hope and hold with this trade. It's extremely easy to say that it ran up nicely afterwards, but that's where we could at least break down what gives us the confidence to think that this will continue in any matter, whether it's for 10 cents, 20 cents, 50 cents, a dollar plus like it ended up making. What gives us the confidence to think, okay, it's not just moving up, but it's setting up for actually a respectable move that we can make money on? All right, well, that's where we have to plot our levels at ahead of time on this trade. So most likely we're going to focus on a dollar here because, common whole number price levels, $1, $2, $5, $10, etc. That's typically going to be an iceberg level. We'll see what Bookmap shows in a moment, level 4. But otherwise, by the time it was 8 o'clock, it was already under that level. So I'm waiting for it to try and pop over that price, break back over that dollar level there. Give me a quick moment. SQL, I have it up on my book map here, so let me bring it up now. Now, this looks a little odd to show because it's not really as definitive with like where these orange and red lines are. There's a lot of them. It looks like one at 105, one at 115, one that popped up here at 110, almost like every 5 cents, 120, pretty much every 5 cents. But, it's just to say that all of those look pretty similar in color, similar in size. Is there any that really stands out one over another? That's the question. Well, it's hard to answer. It doesn't really give me as much clarity, actually. That's where we could look at least the CVP column and certainly this larger, darker red shade here. This was a bigger level, and that's right off of one. That's right off of the whole number, dollar right there, and even 99 cents actually. So it reflects right there on this middle column, the CVP column. So this will show you how much volume has been filled at each price level across a session. So certainly it goes to show at $1, we've had big volume filled at that price. Not only do we have big volume filled at one, but to be transparent, we have a lot more buying than selling filled specifically at the price 103. So I would treat that as a resistance as much as I would one. So let's plot that as well. We'll make that green to kind of represent the buying there. The more buying that we have off that 103, I'd be led to believe that this can make a much better run. All right, so after 8 o'clock, it started to make its move. At first, it popped and dropped it. So the more times it could stab at that level, break over it, the more buying that we have off that level, you're expected to see at least a bigger move off of it. Now, what does that mean? Well, we hope for that big move to be up, right? We're buying the stock. It came out with some sort of news, I'd imagine. Didn't even check just before. But it's just to say that the more and more buying that we have off a big buying level, it should look to make a pretty good move. Hopefully up, certainly up with the trend. But if it's a false breakout, if it were to pop above, lose its steam, and then 10 minutes later comes crashing back below 103 and crashing back below $1, watch out. That's where false breakouts happen. Total head fakes, and it completely comes back down. So thankfully, we didn't really have to worry about that too much. These shakes here are more just like late prints that came in that just temporarily affect the chart there. But it's actually, I don't want to say fake, but I don't really factor these spikes in with my real trading as it's beginning to move back up. So I'm keeping my eye on the bid ask here on the spread on level 2 as well, of course, just with level 3. So I'm watching it begin to push back up. And once it broke back over a dollar, I will tell you, I did jump in off a dollar. 103 I didn't plot as a level on my own end at that time. So even looking at level 3 or even looking at level 4 with you folks right now, seeing this, I did not recognize that real time myself. So, it's just extra reassurance to see, well, why did this have a tough time breaking higher at first? Well, it wasn't $1. I mean, that was big, don't get me wrong, but 103 was the real kicker. Once it actually broke 103, that's what led to the much better move up. Thankfully, it worked out for me on this trade, but I ended up getting out much earlier. I ended up, well, much early on this trade. I ended up getting out on this right off of 110. For a dollar trade, and it was already kind of shaky to begin with, you don't know in full if a stock is going to explode and run all the way up to 2, let alone 150. So, I was up a couple pennies to begin with on those trades, and this was after 8 o'clock to begin with. So actually, I don't think I was up anything at that point. So the more reason to take the money and run, right? It's a shame that I personally missed out. The more and more it ran up, right, the easier it is to hold on from a lower price. The bigger cushion that you have, then mentally you have more flexibility to say, all right, let her ride a little bit, or, oh, let me take out half my trade instead of all of it. But you know what? Now at 11:22 Eastern time, I have that flexibility. We kept trading throughout the morning, built up your cushion, cushion money at least across the market open and from pre-market here. So, there's going to be trades where you're not going to be perfect on. You're never going to expect the perfect move and for it to hit all the time, right? If that was the case, I wouldn't be here. Straight up. So, at least at this point, it ended up making a much better move more after 8:30. It ended up beginning to hold here off the lows, but it pushed up higher off of $1.30 and really at that stage made a much better pop. So let's look at Bookmap here and I'll show you and myself where I could have potentially re-entered, because I didn't really care to check that much afterwards. I kind of just prepped up some other trades and I came back to this one too going into the open, but I didn't really answer that question to myself. Like, is there a price where I could have gotten in on this position after I took my money from 110? So we had said before that basically every 5 cents was some sort of iceberg level, but that doesn't really mean as much if they're all kind of the same size. Not every level is going to be equally strong each and every go around. So, with saying that, it ended up grinding on up, grinding on up. I don't really see anything that truly stands out there from the CVP column. It really naturally just lifted off. If anything, maybe you could say that 130 looks like a smaller, looks like a bigger iceberg popped up for a smaller period of time. But even from there, it looks like they may have pulled part of their order over time here. But hey, the more and more it stabbed at the level, I guess you could say that once it rebroke 130, it led to a much better pop. Truth be told, though, I mean, aside from saying that, there wasn't a whole lot that stood out on the CVP column from that point. There's a pretty big iceberg that popped up temporarily at 169. That I would respect greatly as a level. It was out there for about 10, 12 minutes, or maybe even close to 15. So the longer an order is out there, certainly, the more I'll respect it as a key level to watch, even if it does get pulled over time. So that's where you could say 169 became a pretty strong level to watch, at least throughout the pre-market session. Resistance became support going into the open. But now at this point, obviously, it's just been really flat. It's actually been holding over that price really most of the morning. But just like we talk about, the more times it stabs at that support, much like it could stab at resistance, the more times it stabs at support, it's going to eventually crash below it. So I would be careful on this one, especially with it dragging down as sharply as it is right now. All right. But yeah, SQL, what a move up from $1, if anything. Obviously, wish I could say I held on most of the way through, if anything, but cushion money is cushion money. My, style of trading does not necessarily, not my style of trading. I primarily don't really trade pre-market as often. I really save my trades for Fausto and the market open with everyone here. So, at least in pre-market, if I have a little cushion money to start my morning off with, I'll be really content. I'll be pretty damn content on that, right? Give me a quick sec, at least for all of us inside the live trading room. Just want to make sure that my chat is good here. There we go. Sweet. All right. There we go. All right. So we went over Cano. We went over the KPRX. We covered the SQL for the most part in pre-market after the open. It popped up, got halted. Nasty down halt here. And this could be simple to say, but we say it quite often. When a stock gets halted on the way down, much more often than not, it's not 100%, but much more often than not, it's game over. So I want to hold myself to that rule. The second I saw this down halt and the gap down afterwards, just game over. You move on from it, right? Lawrence, you're making my day, my friend. I appreciate that. I appreciate that. Got an ugly mug, though. All right, let's see what else we got, though, here in the meantime. Lawrence wrote, isn't our leader a handsome devil? Got an ugly mug, Lawrence. I appreciate it, but all right. So the SOUN trade, that leads us back to SOUN, one of the AI stocks at least. Now, what goes up comes back down. A lot of these stocks ended up making such a big move up from last week that, of course, and from yesterday, of course, as well, that eventually we got to expect to see them pull back. So SOUN, the AI trade, BBAI, all of these runners from the last week or so, you should expect them to pull back. And that was my attitude going into the market open. That was my thought. But still, with that in mind, this was a trade. This one here, the SOUN in particular, this was one I really wanted to sink my teeth into because, well, hey, it's pretty damn tradable. Penny spread, very liquid book, pretty cheap. AI, the more expensive this got over time here, the last week and a half, the order book thinned out a little bit. I could trade more shares of a cheaper stock. I don't want to say always have better opportunity cost trading a cheaper stock. Not always the case, but in this case, I felt like there was going to be more bang for my buck on the SOUN. So on this one, at least, I didn't really follow this out the gate at 9:30 because I was looking for that bounce later on, more around that infamous 10:30 reversal time. So I missed out on it just before we were beginning traders talk and as we started here, but I didn't really miss out on a whole lot, I reckon. Um, let's go more to the daily chart on this one. I mean, the line's there already. I just came off a coaching session with one of our students, Felix, and we were hunting this trade, looking for a nice entry on it. So it was just bad timing. I don't want to say bad timing, but right place, wrong time. So you could at least see it, from last year, August, September, October. It was basically pinning itself around 380 and around 375 or so, right? I think we could all agree 380 to 375, basically, right there. That's a pretty damn big level to watch, right? Now, this could even be a swing trade opportunity, but I don't know the first thing about this company compared to another stock we did well on as a swing trade this week on BuzzFeed. Different companies at least. I know one, not the other. But, on SOUN, more or less, I was looking for a bounce on this trade right off the 380, 375 area. So just before it had popped up, right before we started, it had pulled back, and I ended up raising my stop up even on the position because, well, it led to a nice reaction at first and I thought there was going to be more to it. And I said, you know what? If it's not going to give me that reaction I want going into Traders Talk, I may as well just move my stop up and just be extremely conservative and take like a break-even trade. So that's what happened right here as we started. It took me out, actually, stinks to say, but unfortunately, after it pushed right back up. Well, hey, in terms of following strategy, following principle and rule set, the more that you're here, the more that you're likely to follow these rules. And the more that you are following these rules, the quicker you'll become at identifying different patterns and setups. So this is where I could be transparent and tell you, and it's not like shoulda, coulda, woulda. I'm teaching a workshop right now. I know that there's going to be another trade for good old Josh later on today, right? But if I wasn't doing Traders Talk and I got stopped out right here, and if I saw this push right back above 380, I could easily see myself jumping right back in. Maybe on half count position size, maybe full, but I could see myself taking that entry because, well, hey, there's a reason I had this level plotted. I think that we could all agree that, that 380, 370 is pretty big. So I would like to think that we should get a good reaction off of it. So shoulda, coulda, woulda, right? But there's always going to be another trade later. It's just to say now, well, it held under 4. That's a bit of a red flag, right? Because over time, you do want to see the next resistance get flipped into the next support. So this year, you didn't really want to have happen. Just to say, over time, you would have wanted to have seen this become support. There's still plenty of time for that to happen. But the more times that this gets poked at 380 as support, eventually it's going to crash below it. So that's why I was kind of more hunting for it around here when it was breaking back over the level, right? Breaking back over it, kind of going with the momentum there on that one. All right. From Ryan asking, are we still doing Traders Talk? Uh-oh. I hope that he could hear me. I hope that he could see me. We are currently doing Traders Talk right now. I'm going to tell him to log out, log back in then. All right. So it looks like Ryan wants to get his email questions answered here pretty quickly. We'll get to that question right now, Ryan. We'll get to that and answer your emails right now. So let's do that here. I'll jump back to all of this here in a moment. So let's go to email now. How about that? All right. So Ryan sent in 4 questions. And I will tell you what, folks, really briefly, if you are a trial member joining us, this is no better place to go over your questions than Traders Talk right here. But if you are a returning member and if you've been inside our trading room for longer than a couple weeks, I would suggest for you to consider taking our classes. I'd suggest for you to at least look into the phase 1, 2, and 3 curriculum. It'll give you the best insight as far as knowing what we're doing, why we're doing what we're doing, more time to go over a lot of these questions as well. For instance, can you elaborate more on the 30-second rule? This is an easy one for me to go over. This one's easy. The 30-second rule is simple. If the stock is not moving in your direction within 30 seconds of entering the trade, odds are it's not going to make as good of a squeeze as you'd like. So just best for you to either just set a really tight stop, play break even, or just get out. The way that I phrase it is, hey, if it's not making that big move that you're looking for, I guarantee it's going to make a big move. Just the other way. What is the ideal time to enter a trade pre-market? Typically after 8 o'clock, I'd say. Typically after 8 o'clock. If you're able to trade before 8 o'clock, you can go for it, but typically after 8. How much data would need to be seen in order to establish a trend when entering a stock? 15 minutes worth of data, 45 minutes worth of data. That is something that is trade by trade. So it could be even less than that. I don't like to give a vague answer to anyone at all because just as a student, I know that I don't really appreciate getting vague answers more than specific answers, but that's extremely situational in terms of just trade by trade. Maybe we could break down one more here for us, at least. Jump back to my kind of analysis here, right? All right, so Lucy was a great trade. Lucy was a great potential trade, actually. It was on our list going into the open. It was running up actually right before 9:30, so it caught our eye pretty nicely here. But I had this at a good level and a good time. It ran up really well from when I was jumping in on it, but clearly it didn't continue, right? So what happened on this? Well, over time you could see it broke higher, but why do I have my line at 360? What gives? Well, over time here, and we'll kind of just show this for the time being. I called it out initially. Actually, it was like as it was below 360 at this stage. It was after 10 o'clock. So I noticed that 360 was a pretty big level. It was actually after 10 o'clock anyway when this big iceberg order got broken through. About 23,000 shares on the ask. Now, over time, you could see more and more volume got traded there. It just naturally was a big level from Bookmap from my CVP. You could see also here, I mean, not only was it a big volume level, but it was a big buying level. So the more buying that we have off that level, I'd imagine it for it to make a pretty strong run, pretty strong move upward, right? So with saying that, it took one more false break here. And then on this go around after 10:15 in the morning, it ended up leading to a pretty good reaction, led to that better, bigger move up, right? So, in terms of kind of answering that question to you, Ryan, how much data do you want to observe or whatnot before jumping into a trade? I mean, hey, if we have more data, it's going to be more to our advantage. More data means more evidence for us to make a conviction on whether to enter or not, right? So I don't want to have just 5 minutes worth of data and that's it. But it's to say at least once this popped going into 9:30, that's where you start to figure out where your levels are. Like, all right, let's look on level 3, level 4, see where the big icebergs are. We wait the first 5 minutes after the open anyway. In theory, if there was a big level to enter off of here that was noticeable beforehand, then that could have been a good entry right there prior to 9:50 Eastern time. But I'm just pointing out that I ended up recognizing 360 as a key level right around 10:15. And fortunately for this one, where I could say, sometimes I'll get caught in a false breakout at first, and then it makes the better move. This one, really, I was patient on the first one, and then once it rebroke later on here, I jumped in, led to a great run. All right. Really quick from Joyce in the chat. We'll go back to Ryan's email in just a second. How do you make the decision to not chase up? I love that question. That's a great question to answer here because it allows me to not give a blunt response, but give a response that allows you to think. Just allows you to think just perspective, right? Hear me out. Does anyone here need like a password to enter a trade? Does anyone here have handcuffs wrapped around their wrists that prevent them from taking a trade or not? Is there a fee that we have to pay to not take a trade? The only thing or being stopping us from doing anything or allowing us to do anything for that matter is ourselves. So, what do I mean by that? Well, basically, I answered the question of how do you make the decision to not chase up? You say, there's always another trade. Now, what do I mean by that? Well, you do want to play it level by level. So here on Lucy, if you missed it from 360, it's not to say, oh, just don't trade it. That's it. No, see where the next level is. See where the next level is from there and react at that point. So, hey, maybe resistance can get flipped into support. We'll see what happens at that point. But otherwise, the more and more this can break above the next resistance, maybe over time, this can make a sharper pop from 4 and go. Obviously, it didn't do that. So ended up consolidating and then eventually pulled back. So, at that stage, it also tied into reversal time pretty well, roughly around that 10:15, 10:30. So, those are things that I think about when it comes to entering or not entering. And again, what I mean by that is I'm following rules. I'm following what we preach in class. And it's not just what Josh is preaching to himself, because keep in mind, I'm basing my own trading around these rules that I'm preaching to everyone here. But you have to keep in mind, these are rules that Fausto taught me in 2014. So I've heard it from him long enough to where it's been built within my own kind of habits each and every day. This could be easy to say, but the more that you're here, it's going to become very fluid to follow these, more cardinal rules than anything. For instance, if anything, one of our cardinal rules, never turn a day trade into an overnighter, right? There's a fine difference between swing trading and day trading, and you should know that difference before you press the buy button. Now, another distinct rule, and again, the more that we're in class and that we watch these classes and are in the trading room, you'll know it yourself, but I'm sure every one of us could have answered, hey, 10:15, 10:30 is that reversal time. So if we know that, if it's that cognizant to us there, if we know that reversal time so well, then we should be a little more reluctant to try and jump into a trade as it's still moving up and up and up and up. At what point does this look to make its false breakout, right? Now, could I answer a follow-up question to that one, Joyce? Because oftentimes I'll get a follow-up and it's, well, what happens when you miss a move? That's a different question than, how do you make the decision to not chase up? Because I can make the decision to not chase up, but what happens if I just miss the move? What happens if it pops without me, makes the bigger pop when I'm not expecting it to? I'm expecting a false breakout, so I sit on my hands, but it pops suddenly. So at that point, you would want to hope for a resistance to get flipped into support. Meaning, let's say if you were kind of sitting on your hands too patiently here and it moved up, well, you're going to either look for 360 to become support, which at first it tried to. It broke under and over right here, generating a potential entry, but it needed to make a good reaction, which obviously it didn't. On this specific trade, it obviously ran up pretty well from the call out I had. If you missed it from there, it's just to say you either wait for that to become support, you wait for the next level for an entry at $4, which easy to say. It actually didn't even break over 4. It actually didn't even suck anyone in from $4. It actually just held under that level perfectly. So that's actually a good thing. Didn't suck anyone in from 4 and tank on anyone from there. But the other option would be, what other stocks are moving out there at that point? Because there's plenty of other fish in the sea to catch. It's still a good time to be trading. We're getting close to that 10:30, but still proper time to be following a few trades. So for I think it was the SLQT that Fausto had his eye on. That was also something that was still moving at that point. Obviously the SOUN trade we had our eyes on going into 10:30, beginning to make that bounce. Easy to say, but there's other trades out there. That's where I can more or less ask about, hey, what's your monitor setup like? Are you only on one monitor, just following just us in the room and that's it? If that's the case, then it's going to be a lot harder to juggle and follow all of these different charts. That doesn't mean that you should be on 18 different monitors following 25 different stocks. Just to say, you got to follow more than one thing at a time. Give yourself at least more than one option to look at. All right, so let me jump back to Ryan's emails here. So going back, I want to just jump back to Ryan here for right now. So we answered that one. Question 3, how much data would need to be seen? It's very situational. I hate giving a vague answer. But again, just trade by trade, we have to follow the big levels first. And once we get in, we need to see a pretty good reaction to start. If we don't, odds are it's like, play to your level. But if it breaks below your level, just take the loss and run, right? No ego. Question 4, do you normally take out all profits if you are reducing your position size by 50% in a trade? If I'm reducing my position size by 50%, aren't I not getting out of the full position? So you're asking, do you normally take out all profits if you're reducing your position size by 50%? That sounds like a trick question you might be trying to throw me there, Ryan. No, I'm sure that wasn't as correctly written there. So if he wants to follow up on that, let me know. But if you are reducing your position size by 50%, you are not taking out all of your profits there, right? I mean, maybe you're thinking first in, first out type of trading, but I just kind of do it more on cost average basis, and that's it. So, all right, let me just keep going through some emails right now. I'll follow up with Ryan in just a moment. Okay, so this is a good one here. So, are there any? Basically, it's a longer email, so I'll try and summarize it. So, for as long as you've been trading, are there any new strategies that you've incorporated that you've looked to have followed? I'm not talking about Bookmap because that follows the orders and looking at for the icebergs. But are there any other strategies that you've employed or used over the last however many years that has given you confidence to try and trade? Well, the key with this, much like I talked about with following too many different stocks, is you don't want to follow too many different strategies. And we talked about this before. We talked about this in past traders talks. Actually, the member asking is a new student. So I want to make mention that, we've covered this in the past, mind you. But this is something extremely important, especially for new students joining us. Because if you're a student that's been with CTU for longer than a year, I imagine that that you've committed yourself to C2 strategy. Like you're here for longer than a year, right? So you believe in the strategy and you're using it. I'm talking to new students that have joined us recently that, like us and they're giving us a shot, but, they don't know if this is fully for them or not. Maybe in a couple of months they realize it's not for them and they move on. The best piece of advice that anyone could ever give you with trading, regardless of what avenue of trading it is, whether it's options or investing or swing trading or Forex or crypto or any of that, the best piece of advice that anyone could ever give you in any market anywhere, any person anywhere can give you, is focus on one strategy and that's it. That does not necessarily mean to, just only focus on icebergs and literally nothing else. I mean, a trading system, a trading system in full. CTU has a trading system that we preach. We go over it all throughout phases 1, 2, and 3 of our stock trading course. There are other educators out there, friends of CTU, great partners that we do business with, and they have their own classes. The great Tom Busby of DTI, he has his own, system, right? And, I would suggest to anyone, for any trading system, you name it, if you're going to commit yourself to one system, don't try and dip your hand into all these different pots without being a full-fledged master of one already. You know what I mean? So if you're a blank slate to begin with, then I'd still suggest for you to take it one course at a time, one system at a time, because you don't want to overexert yourself or overwhelm yourself, overexert energy with studying. But especially, at least for any of our students here that are joining us, regardless of overall experience, it's just to say, that you got to take it slow and steady. So if you are someone that likes trying this person, that person, ask yourself the question: are you making consistent money each and every day in the stock market right now? Are you? If you are, the next question is, are you making the type of money that you want to be making? I'm sure there's going to be a fraction of us that will say yes to that. And I'd say that's awesome. God bless. Congratulations, right? Felix. There we go. So, just to say at least that, most of us aren't going through that, right? It's just to say if you are trying all these different classes, it's harder to try and absorb that knowledge from each and every instructor. I mean, we're not robot people. We are people. So, it's saying that, yeah, I mean, myself, I learned kind of from Fausto early on back in 2014. I don't need to go through a little bio of myself. I did that like a month ago here. Just to say, at least I came in with zero trading experience. And, that allowed me to really focus in on just Fausto, just CTU. I was a sales rep for him at first and, kind of just going through the motions of just kind of working with like new trial members. And, I realized like, wow, this is actually doable. So what I could have done was I could have tried to look at all these different indicators, look at this and that. And over time I did. I did. And well, you don't really see me use too many indicators or anything else other than what we preach in class, right? So I've gone through trials and tribulations myself. You bump your head on the hardwood floor a little too much every now and then, and you learn your lesson the hard way. I could tell a couple stories where I fell in love with moving averages, for a couple weeks back in 2017 or 2018. And, you learn your lesson. You realize that your entries are absolute crap. And you're like, what am I doing wrong here? And you realize like, well, shoot, I'm not following the big money. I'm not following the iceberg orders and what led me to be here to begin with. So, you know, we preach certain things in our classes, not just iceberg orders, obviously like core charting principles. We'll focus on the preparation behind trading the market open and the market close. So there's a lot more to it than that. But to learn from this guy, that guy, I would find your groove. And once you find your groove, stick with it. From that point, don't try and dip your hand in other pots. All right. Phil saying, Josh, you've been using the Fibonacci's lately. Please explain your use in buying or selling. So that's been more in relation to swing trading. It's not as often that I'll use it for day trading, Phil. I could go over one use of it that I had today. I deleted the fibs from my chart, but I plopped it up quickly just to see. Actually, we'll see how the levels played out because I don't remember exactly how it played out. So let me just go to the trade. It was one of the big pops from this morning. Yeah, it was the KPRX. Now, again, I don't want to go too much into indicator talk right now because I don't use this too much. But, with Fibonacci's, I would say that extremely situational. If you don't see a really good opportunity to use it, then simply put, don't don't force it. That's just what I tell myself. If I'm having trouble, it's like, all right, don't force it. So here I saw a good opportunity to use it. What I did was I basically went from the close from yesterday and I went to the top here. And over time, this was holding pretty well. Oh, actually, at first, pardon me. I did it from this one initially. And that's where I was commenting, Phil, early in the morning here in pre-market, that 5 was not just a whole number level, but it was actually a pretty strong fib level for this trade. I'm going to do a little copy and paste here for all of us inside our live trading room, at least. I just did that right now. You'll see the chat that I made from 7:35 this morning. KPRX is or at 5 is a whole number. Also a fib level for this trade, holding well for now. Pretty interesting. It did for a little while there. Now, eventually it broke a new high, so I would have to like shift it here to represent like the bottom to top here on the retracement. So I would use these lines to try and follow this trade for after the open. So what happens here? Got choppy around this here for a while. I would kind of focus more on the 50% and probably even lower than that, like the 61.8 as your bigger levels. So 448, 450 right here. And then below that, like 420, 419. But, this was easier for me to use it because you had a pretty clear bottom and you had a pretty clear top. When you don't have a clear bottom and top, it makes it a lot harder for you to try and use it. So don't force it. Again, icebergs above all, folks. Following the big money, looking at big prints on time and sales, big dots on bookmap, icebergs. It's always going to take precedence and carry more weight to me than anything else. Again, I learned it with fibs. I've learned it with moving averages. I've learned it with MACD, RSI. I've learned it with all these little things I try and study on my own end. And, at first you learn the hard way again because you fall in love with those strategies at first because you think it's the holy grail to complement icebergs. But without having actual respectable experience using it, you're not going to know when to get out of trades when you should, and you're going to mess up. So that's where I say until you master following the big money and what we preach in class more than anything, I would not suggest for you to try and dip your hand in all of these pots. That's all. I've lost enough money myself doing that for you. So Bell says, is the 1-year chart a C where the previous resistance or support or 6 months chart is okay too? So to kind of answer that as best as I can there, I don't know why this is converting to a 1 minute there. I should have been. There we go. So, basically, Bell, I'll look at like a daily chart. I'll look at a weekly chart. I'll look at a monthly chart. Basically meaning where the candles of each or the candles on the chart represent 1 day, 1 week, 1 month. But I can go back a number of months and years here on this KPRX if I need to. For instance, if there's a stock breaking all-time highs, I'm not going to know if it's breaking all-time highs until I go back on all the historical charting. So if I need to go back as far as I need to, then I will. I'll primarily use a daily chart to do that, though, where one candle represents 1 day. But when it comes to setting up my mornings, I'll often use this as well, the weekly chart or even monthly if I need to. Now, with that, this could be a good example. So I'll plot my regular chart here coming up for you in a moment. I'll show you the exact levels that I took the time to plot here this morning on this KPRX. But I'm going to show you the daily chart first, or the weekly for that matter. Pardon me. Notice that, we're not looking at this here. We're looking kind of where my cursor is. Let's try and pluck a historical level. See where there's a historical level, because this is from the last year or so, right? Last 6 or so months. Well, let's just try. So right there, notice it bottomed out here and here and here, basically at that line, basically at 560 it is, 560, I think. Yeah, just about 560 or so, right? Just about. I'll move that up a little bit right there. Perfect. Held above it here. And then on this weekly candle, it smashed under support. When a stock breaks below support, folks, and it tanks from it, support should initially become what? Now, this is where I say, at least, the more that we're here, the more that we're in Traders Talk, the more that we're watching and taking classes, the more that we're just actively watching the screen, you're going to be able to apply this much quicker, right? And react better. I mean, hey, just look how fast everyone answered that question. Sam, Ravina, Joyce, Bell, Michelle, one of our trial members even. It's just a basic charting principle. It's like trading 101, looking at a chart. Regardless of CTU and how much I want everyone and new students to follow what we preach to the highest level in class, if you come in with your own trading experience, regardless if you've followed the markets for 1 year, 5 years, or 50 years, that's like one of the first rules that you learn with basic charting. When a stock breaks below support and tanks from it, support becomes resistance, the floor becomes the ceiling, and vice versa. So on this trade, for the first time that this is moving back up to that historical level past support, how could you not think that that would be resistance? So that's at least to kind of just answer Ravina, or to answer Bell, that is, I'm sorry. I'll go back as far as I need to. It could be years back if I need to. If there's more recent relevant price action from like the last 6 months, then I'll focus on that first. I'll focus on the more recent price action first. But if I need to go back years to do that, or months or years to do that, absolutely I would. All right. That one was from back like 6 months ago, at least. So that was just more visible from the weekly chart and really stuck pretty nicely. So, all right. So, folks, we might be wrapping up Traders Talk for right now. I got to just go through my inbox one last time, go through any other questions I may have missed. For any of our new members here, keep in mind that we do Traders Talk inside our live trading room each and every Tuesday morning, that is. I know that we're doing this on social media here today, so I appreciate all of us just joining me here live right now. But we do this workshop each and every Tuesday morning, so if you're interested in joining our live trading room, just go right down to the link on the green banner below the stream to get yourself set up for a trial. But before we finish up, though, let's just kind of do a quick scan around, see what else is out there before we wrap up, and see if there's any last questions, at least. That SOUN, unfortunately, again, we talked about this. The more times that this stabs at this level here, you're expecting the support to break. So, you got to watch out. The more times it can at least break above it, there's a chance for it to get that better reaction and snap up higher above 4. So going into our afternoon meeting, our next stream on YouTube and Facebook Live, our social streams there, I'll be looking for that. If this could break back over 380, then I'll look for an entry on it. But obviously now it's trending down pretty nicely. So actually coming off the AI trade, how about this? One of my students, I was on a coaching call earlier, Felix, we actually took that SOUN trade together. It got stopped out before it temporarily ran up there without us. But, the AI trade, I thought this could be interesting. We'll check back in collectively on this one as well. You could even see the yellow line I put here myself. I was on a coaching call with our student Felix, and we saw this here on level 4. So there is a pretty big iceberg. I mean, it was there, still there right now at $24. But there was one here at 24.04, pretty big as well in size. So that should be pretty significant as a support. We were focused on that going into Traders Talk. I didn't mention it verbally in Traders Talk until now, but we were writing about that in the chat board. And then now at this point, with it breaking lower, it only leads me to believe that we'll see this come down to 24 at least. But why this line? I mean, I put this line here. What's that to do with? So I actually went back on Bookmap a number of days back to Friday's trading. And, pretty interesting. This order was here the whole time. It generated a really good support afterwards. This 23,000 share order, it was roughly off of 23.88. I think that price is maybe 23.85. I'll move it down a few pennies actually, but right here, it was from Friday. It held so well. It's just a potential support to complement the 24 level, if anything. So it's really the 23.85 level right here that I'm going to focus on for a potential bounce on this trade. It's dropping off pretty steadily. So I would look for this range collectively to act as support, and we'll see where this trade can go alongside the SOUN. All right. From Dan, SOUN is voice AI. Think about entering a trade with your voice. Ooh, that's pretty interesting. How about that? I'll think about that. I'll look more into that, Dan. Appreciate the heads up there. Right now, as far as any movers that are trending upward, actually, I mean, right now I haven't tapped into with the SPY of recent. So looks like the market's been moving up pretty nicely since we started this workshop. A couple of good slingshots, perhaps. Not on Coinbase, that's for sure. I was expecting Coinbase to have a nice bounce there. Clearly not. Affirm, I think, has earnings this week. AFRM, something to keep an eye on, I think, for tomorrow. Clearly, this is trending down, so maybe a little bearish momentum on this one prior to earnings. Man, SPY was doing pretty well just before. It's actually up on the day a tiny amount from yesterday's close, and it was trending up just before. So there's not really a whole lot, actually. Pretty interesting to see. Airline and cruise line stocks just really weak right now against the market. Casino stock like MGM, Penn National, Shopify looks pretty damn weak on the way down to big support at 50. And then that led me to Scott right here. I was going to get to this, so I was kind of like doing a circle around to the small caps. But yeah, Scott with a good call on the BGRY. This popped up on my Benzinga beforehand. So this is looking pretty strong. This is something I do want to keep an eye on. Berkshire Gray Inc. Don't know the first thing about the company. I doubt it's related to Berkshire Hathaway. I'll just double check to make sure. I don't know that though. So either way, we'll follow up with this one. It actually looks pretty strong, so I do like it here. But otherwise, again, AI, I'm going to look for 24 and that 2388 area for a bounce, and we'll see where that can go. But again, for all of us on social media, Facebook Live, LinkedIn, Twitter, and YouTube, if you have any other questions that you'd like to send on over, feel more than free to shoot me a quick email, josh@ctutrading.com. I appreciate your participation throughout this workshop here. But if you're interested in joining our live trading room, just go right down to the link on the green banner below the stream to get yourself set up, to get yourself started. I'll be back on later on today at 2:30. All right, folks. So we'll catch up. We'll see where these trades lead us here, the AI, the BGRY, and a couple others. For any of us inside the live trading room now, if you have any other questions that you'd like to send over my way, certainly you could always email me here. But private chat me as well. Private chat me. I have to get back to a couple of us, Jeff, Tom, and Mark, and a couple more of us, I think even from earlier today. I'll chat you folks back just in a moment here. All right, so again, I'll be back on the mic for all of us coming up later on at 2:30. Talk to you soon.